Good evening, ladies and gentlemen. It is Brendan from Market Makers. Welcome to the show. Guys, let's talk about Bitcoin. Today, we're going to follow the money. The equities markets didn't do a whole lot today. They finished down. So what we're going to do is put an equities video out tomorrow. We'll focus on Bitcoin and crypto. Because this is a crypto video, guys, it is brought to you by BITGET, where we trade crypto. Private tournament does start July 1st. The link for BITGET to get invited to all of our private tournaments, get our bonuses, is in the video description, guys. No VPN needed, no country restrictions. Check out BitGet. Guys, and if you want to trade with us, two options. You can check out the Telegram if you just want trade signals, and if you want something more, if you feel a yearning for something more, maybe education or community with 10,000 people, click the join button right underneath this video, and you get everything on the Discord, including the trade signals. Now, let's talk about Bitcoin, guys. You guys have seen me go over the Nasdaq, tracking to Bitcoin. You've heard the hedge fund managers talk about the Nasdaq and Bitcoin. I've told you about the 2.0 beta difference between the Nasdaq and Bitcoin. But you guys have seen this chart numerous times now, to the point where you're like, I don't want to see this chart anymore. The 200, 233 on the weekly. Bitcoin is clearly below it, right? Does it have any relationship with the indexes as they stand today? Well, let's check out the S&P. The S&P, as you guys know, we long this. I put this trade in our Discord, in our Telegram. Got a great pump off of it. Broke through some resistance. Will it rally? I don't know. It's printing a doji right now. There's no volume on anything, so we'll see what happens. But look at the 200, 233. S&P clearly above it, about a 9+% drop to come down to it, which, by the way, if you do start falling, that is where I expect it to go. That's roughly 3,500, and then get some type of bounce. So it's not tracking to the S&P. No shock, no surprise. What about the Nasdaq? Well, here's your 200 and 233, clearly below you, right? Clearly below you. Guys, there's a method to the madness. I'm going to explain to you why this is important. The Nasdaq is hung up on resistance, and if you do fall down, you could be coming down to your 200, 233, roughly 10,900, and that could be your next inflection for a bounce, okay? Again, about a 9 to 10% drop to get there as well. Look at the Russell. Of all the indexes in all the world, look at Bitcoin and the Russell once again. Now remember, the Russell and Bitcoin made their all-time highs within 48 hours of each other. Both are below the 200 and 233 on the weekly time frame. Why am I showing you this? Why do you even care? If you don't care about equities, fine. You should care, because if the indexes do rally, remember we are dramatically oversold, but we're at resistance, and the indexes, if they do rally, then if the Russell rallies, if Bitcoin and the Russell are tracking this closely together, they have the exact same setup on a weekly time frame, you could see Bitcoin rally. If you see the Russell start to fall apart more, you could see Bitcoin start to fall apart more. Always looking for patterns and trends, guys. Got to keep your mind open. Got to be well aware of what's happening in this environment. Let's look at our weekly price pulse pattern. My price pulse pattern, guys, I finally updated it for you so you could see the new projections for targets. People have been getting on me in the comments to update it. So right now what we have here, guys, for the B wave up, we're looking at 32,923, which is your new 382. Let me show you how I got that. So from your previous market low there, the 28.8, up to your all-time high, down to your current low. Remember this current low, which we tracked over a month ago, maybe 2 months ago now, 17,956, and we got within $400 of it, okay? So the fibs have been capturing price movements very, very accurately. And if you look at the 382, 32,923, the 0.5 at 37,667. 0.5 is interesting for two reasons. Both Charles Dow and W.D. Gann believed the most important retracement due to the natural halving and doubling in the marketplace. Also, right around the same range on the daily where your 200 and 233 are coming down, right? So remember, my market top is dynamic. Wherever the daily is with the 200 and 233, that's my market top. That's where if we do have a massive bull rally, I do believe it will end, regardless if it's next week, a month from now, wherever that 200, 233 is on the daily, because we are in a bear market, trading in a massive equities bubble, a housing bubble, a bond bubble. Guys, that's where I would expect it to end, okay, with interest rates rising and inflation roaring. Now, you also have the 618 at 42,411. Again, Not likely because of the conditions that we're trading in. Now, I know everybody's all bulled up on YouTube, okay? I'm aware of that. And people are bragging about their longs that they're in. I see Plan B put out a chart a couple of days ago where he's showing, Bitcoin within whatever, 3 years, 5 years, going to $1 million. Let me tell you something, guys. Everybody is a bull market genius. Everybody is a bull market genius. This is easy, right over here. Oh, yeah, I just buy here, buy the dip. Buy the dip. Let it keep going up. Buy the dip. It keeps going up. The problem is once you're in a descending market, in a hardcore bear market, this is where understanding key support, key resistance areas are very, very important. And a lot of people don't understand this and they struggle with it. But this is why you guys need to learn to trade with fibs, understand Wyckoff structures, and understand market patterns and market movements. Very, very key. Okay. Shorting the market. Most people who trade, listen to anybody who manages a hedge fund when they talk about shorting, it's really like an art. The market falls apart much differently than it ascends, okay? Very easy to trade on pullbacks when you know the general direction. Much harder when you get 20, 30, 40%, 80% moves up and down in a descending market. So everybody's a bull market genius, and everybody's just thinking because Bitcoin historically always held the 200, but now it's not holding the 200. And then they said Bitcoin would never go below the previous all-time high from the last bull run. It did that as well. And now everybody's looking at 12K, right? People are looking at 12K as the max downside. Guys, the equities have only completed one leg down. I told you the S&P probably has at least one more leg and most likely two more legs. You're looking at a minus 50% S&P to a minus 66% S&P. So if the S&P right now, by the way, what is that down? It is down, I think, let's go ahead and measure this really quickly here on the weekly. To where it's at now, it's not. It just got out of a bear market. Okay, so it's back down at like 19%. So just imagine that Bitcoin is hovering around 20K with the S&P down 19%. What do you think this will look like when the S&P goes down 40 to 60%? That is money leaving the market, going to cash. The dollar will explode, going towards $1.20. We have high commodities, which is oil, food, metals, high commodity prices. We have a rising dollar exponentially, dollar going up to maybe $1.20 again, and we have a descending stock market. Gee, what does that sound like? It sounds like the dot-com bust, okay? Exact same situation in the dot-com bust. So just be aware of that, guys. But we trade, and we trade longs just like we long the S&P, and we will long Bitcoin if we can break key resistance. Okay? So this is what we're looking at here. And how did I get those projections downwards? Well, I can show you that as well. And why people may be wondering, why even use trend-based fib? Well, because if you used it here from the beginning of the bull run, to your previous all-time high, to that market low after that previous all-time high, it gave you the 618 at 66,523. The candle got up to 69K, no closes above the 618, okay? The trend-based fib has been killing it with accuracy, and it's still killing it with accuracy. Gave us the support lines on the way down, which we bounced off of all of them and held the 17,001, okay? So that's the one that we're holding. So I'm still looking at these predictions, and if we do the trend-based fib from the previous all-time high to the market low to the current all-time high, that's where my pattern ends, guys. 10,591. And as I said before, I do anticipate sub 10K Bitcoin, looking back towards those pandemic lows if you lose this key phi structure. Okay, so we'll see. The timeline, guys, I'm not married to the time. This is fib time. Fib time can be very accurate. It's also not been accurate. So I'm looking at some Gann cycles I'm going to incorporate into this and see if I can marry it up better. But the actual wave projections, as you guys can see, have been tracking absolutely gorgeous, right? Gorgeous. Let's look at the daily time frame. So daily time frame, guys. Here's my Gann fan. I want to do something different because we can get a lot of price action with Bitcoin. So we're going to put you in the mind of Richard Wyckoff, okay? And let's view this marketplace in the daily time frame, which is where he traded, through Wyckoff lens. So let's look for a selling climax candle. Let's look for a reaction candle, right? And then let's see our trading range. And I'll walk you guys through this. Selling climax, reaction. Here's your volatility, made a double top. Here's your retest of your base down here. Bitcoin's super volatile. Get a double bottom there. Launch up, right? Try to get a cut pattern, but instead turns into a double top, and you start falling down through the range, tracking along your Gann fan, and you just fall straight through, exiting the Wyckoff trading range. This was an accumulation box. Why would it be accumulation as a bias? Because you had marked down entering the box, okay? Hence selling climax, and you try to build up a bullish accumulation pattern where you exit. Remember, you got to make your base. You exit and you propel up. Instead, you fell apart, and now you're down in this next trading range. And let's go ahead and look at this. Next trading range, clear selling climax candle there, right? Clear selling climax candle, and then here's your reaction. And same thing, guys. We got to expand this some for you. You can see the same exact steps repeating over and over. Base, ceiling, reaction, volatility. You try to break out. You get your cup, it turns into an up thrust. You can't break out, and you just fall apart again. Okay, these steps keep repeating over and over, guys. This is why it's so important to understand how money flows through the marketplace. And where are you now? These accumulation boxes, therefore flip to distribution boxes, okay? So we have a selling climax candle, and we have a reaction, and this is where we are. We just keep making Wyckoff structures over and over in a daily time frame. Yes, you can zoom out. Yes, we have members that look at this on the weekly. I've looked at it on the weekly. You can put the whole Bitcoin bull run into a giant Wyckoff, but I'm trading these more mini Koff structures because the price patterns repeat after dissension, after dissension, after dissension. And the easiest ones to trade, guys, is when you get textbook like this one right here. Let me show you this. If I go ahead and delete this, and here we go. Clear selling climax. Remember this first dip, right? We had this first dip. Clear selling climax candle, that huge retracement. Look at that wick, okay? And then we have a reaction, clear reaction. Price behavior changes, volatility in the range. You break up. And what do? You make an up thrust. From that, you get a sign of weakness, and price falls down. Now, the textbook type Wyckoff, remember, we always talk about when you break out to the upside, you want to make the cup, right? You got to get the cup, deliver more pivot, and then that's where you can base and then launch from. It works the same in reverse, okay? In reverse, you're trying to hold on to support. Remember, this is that area for you longer term subs. You'll remember we narrowed this trading range, right? Because with this big, huge trading range. We narrowed this trading range, but this works in reverse too when you look at this. So price falls down, and what does it do, guys? Inverse cup. You see that? Your inverse cup. So the same movement you would have done here, you did it here. You fell out of the trading range, came back up, you made an inverse cup, and then you just capitulated down into the next trading range, repeating all the same steps again. Wyckoff over and over. All the Wyckoff method does is track money flowing through the market. It has defined steps that it must complete to break out or break down. And when it breaks down textbook like that, gives you really nice trade setups. Let's look at the 8-hour time frame. 8-hour time frame, guys. Looking here, you see we have this beautiful dragon pattern I showed you guys the other day, and we did break through the 45 here, and using the Gann fan for the trend. We did break through to 45, but again, guys, no velocity. Look at the grayed out candles. This is an 8-hour time frame. I do volume divergence based off the daily, but as you can see, no velocity to this move at all. And so you just have ranging price. And if you want to get a prediction for your downside, you can take your trend-based fib, go up here to that point B, point C, point D, you land it right on the 618, the most commonly retraced to fib. And you're also land it right on your whole 55. So we'll see if Bitcoin can hold here and just keep accumulating, or if it will not hold here and will start to fall apart. But again, I think that's going to be tied to what this does, okay? This is going to be tied to what the Russell does because it's in the exact same spot. So let's see who flinches first or who moves first. Be very interesting to watch. And let's look at the indicators while we're here. Money flow is going down on the 8-hour. The force behind the move, momentum, is negative, and we did have a sell signal here. Volume is below the moving average, and small small. Let's go to the 4-hour. 4-hour time frame or Donchian channel, guys. We talked about this the last video or the video before, but when you hit the top of the Donchian, Richard Donchian, the godfather of trend following, one of two outcomes. This is an attempted breakout in the Donchian channel, which requires what, guys? Volume. Requires buyers to break out, right? Buyers to break key resistance, which we discovered with our trend-based fib that we laid out last video, 0.5 at 21,823 in the smaller wave projection, got rejected, so now we're falling down, breaking that 45 angle. Okay, so when you test the top of your Donchian channel, you're attempting a breakout, or that's peak resistance and you roll down. Okay, it's just another trend thing that you guys can use. I like to follow trend. I have a couple trend trading videos I made for the room. If you are interested in the education side, definitely check out that Discord. And you can see here, we are still near the top of the Wyckoff range, but we're just trending sideways. The markets, like I said, are pretty flat, but let's look at the indicators while we are here. Volume, 4 hours going to display differently, smaller time frames. So you have a couple candles that got, or at least one candle that got above the moving average. Money flow is down. Momentum is flat. Sell signal from before. So everything's still bearish. Okay. Obviously, you lost some momentum here. You fell through some key support. Well, and you're floating in the middle of the Donchian. So we'll see what happens as Bitcoin attempts to move around. Guys, I think that's it. It's pretty late here. Making this video late, had a busy day today. So I'll go ahead and upload this. Tomorrow I'll put out the equities video. I'll put out a Bitcoin video as well. And guys, as always, fun hanging out with you. Another video coming tomorrow. Take care, everybody.